All right, ladies and gentlemen, I hope you had a wonderful day. It was one of the worst days for the market since 2022, and literally for the MAG7, it was their worst day on record. The group combined saw losses of $833 billion. You could thank Tesla for that primarily, but it was a pretty wild day. We still closed down 4% on the NASDAQ. Literally, even right now, after hours, Tesla and Nvidia are going lower. But at one point, we were trading near 5%. We have broken the 200-day moving average. And the reason why, it was kind of nothing. Literally, the fear over the weekend and that global uncertainty, it was in full effect. People got a little spooked by the Trump comments, but this confluation of everything is bringing back some of the recession fears. So we're going to talk about that. I have a lot that I want to cover, and I think you should see this for now because I showed you this early, and we're going to talk about why you need to stop buying out of the money puts. Oh my goodness, I can't stress it enough, but here is the update. If you compare where we are at now to Trump tariffs 1.0 back in the day, we are now doing worse. So this is where things get interesting. There's a lot riding on the table. I'm going to share a nice little theory of what I think is going to happen. We'll go over plays, all of that good stuff. And before I get into that, this is the reason why you don't buy out of the money puts. So yeah, we're going to talk about that, and I'm going to go over some strategy, but drop your thumbs up on the video. Make sure you're subscribed, and if you don't know, we are live Monday through Friday, 30 minutes before open, youtube.com/the stock market. We will see you there in the morning, baby. Run it.
Working to the couch, it's the 2020 election. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Fear how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it.
Right off the bat, as far as what happened today, we're going to talk about this here a little bit. I believe that this standoff is in full effect. And what standoff? It is literally Trump versus the market versus Powell. Remember, we just heard from Powell. He didn't say much. He was a little bit more aggressive. We are going to be hearing from him in about a week or so. We are going to get the data here with the CPI this week, but when it's all said and done, there is policy, there is rates, and then there is whatever the market is doing, what it wants, and what it believes. Now, here's the odd part about today. It was one of the bigger days that we have seen. We are definitely playing out like we saw back in 2022. We even talked about it yesterday. There's a lot of global uncertainty that has not dissipated. This whole idea of stocks down and yields down, we saw a little bit about that, but it is not like anything crazy happened over the weekend. You even had comments out of Mexico. It didn't really move the needle too much, and it was really the comments by Trump where he was saying he can't guarantee whether or not there's going to be a recession, and him pretty much saying he does not care about the market. Now, we already knew this. He kind of reiterated it, and over the weekend, people did not like all of that, and with all of the data that we've been seeing initially, besides the jobs report on Friday, people were getting a little bit worried until the data said you don't have to be too worried. So when it's all said and done, it's not like the economic data has moved too much from here on out. This, literally a couple weeks ago, we were worried about inflation and tariffs causing inflation. Now people are worried about the economy slowing down, even though the jobs data was good. The ISM data, one part was bad. All the rest of it ended up being good. So we'll see what the CPI brings, but I'm saying what I've been saying a lot this year at every single corner. Up, down. I mean, I've been telling you, not much has really changed, and we are just moving 5% today, even off of expectations. So I think it's Trump to the rest of the world. There's all of this uncertainty floating around, and people are playing this dynamic, and now we're going to see who's going to ultimately win. Powell? Is Powell going to get what he wants? Is Trump going to get what he wants? Or is the Mr. Market, is he going to get what he wants? So that leads into the theory, and this is what I pretty much think is going on or is going to happen. I think this all has to do with the bond market, and the beauty is that I've talked about this in advance, so this shouldn't really be too crazy, and I know this sounds wild, but I think the Trump admin is either going to leak or start getting bullish once the 10-year hits 3 to 3.5%, aka I think Trump and Mr. Besant all the way down to Lutnick, I think we'll start hearing less trade hawk stuff, and maybe we'll even get some good deals with China and all of that once the bond yields go down. I think what is happening right now is we are getting a game of chicken. It is either you get a recession to hit, Powell blinks and is starting to jawboning and changing expectations, or Trump caves and is like, you know what, I do care about the market, or, maybe we're not going to be this aggressive with this trade policy, and Trump brings in the certainty. So I hope you're getting what is happening, because the market is in a weird way trying to throw a tantrum. Powell is trying to do nothing, and now pretty much from this weekend till today, even though we already knew that Trump didn't really care much about the market this time around, it was clear that Trump is saying, I'm not going to do anything. Maybe we'll get a recession. So now you're playing this game. One thing is going to happen. If the recession happens, if the market sells off enough, that could make either Powell or Trump panic. That could bring in some bad things, or maybe we start to see the data go down. Then that's going to determine the reaction. If Powell says, you know what, enough of this uncertainty and we got to do this and step in, or he changes expectations, that would be another shift. Or again, if Trump comes in and changes policy, until then, I think the market is going to be very volatile. You'll get chopped. That's why we only care if we go lower from here. I think the upside is pretty easy unless you're shorting or under position. But when it's all said and done, we want to see, do any of these things move? Does the market kind of capitulate and give into it and start trying to throw a tantrum? Is Powell going to change things, or is Trump? So I know this all may sound kind of bad, but I think this is a very good thing. I've been talking about this for a while, that after the last 2 years, 2024 and 2023, those were massive years. Historically, you've only seen back-to-back years like that 4 or 5 times in the history of the stock market, and usually whatever happens next, it is a big year, and it depends on what happens with bonds. So this is what my whole theory is based on, is I think Trump is willing to back off and play this little game, because at the end of the day, the bond yields are going down, and the market got a little ahead of itself. People front ran aggressively. It's not like this is a low price. It sucks. If you came down here, people would lose and it would be aggressive. But when it's all said and done, this is still a pretty high price. The previous highs, I think even like 500. But if it brings the bond yields, TLT up, bond yields down, I think that's what they want. Or like I'm saying, once the bond yields get to 3.5, I think they'll chill off of there. And why do I say that? Because bonds were kind of already chilling leading into that. I mean, I think it's already odd that bond yields are as high as when like banks were failing. Even then, even before the bank failures, the rates were lower. So I don't know. I think the bonds kind of overshot on fears, recession, Trump, and I think it would make their policy and a lot of things easier if you got back to that position. So I think they're willing to sacrifice a little, but all in all, the bonds hold up. Even if we come down, I don't think you're going to get a really bad year if the bond market does good. Now, if the bond market does good because of recession, Powell blinking, or stuff like that, that would be a different story. But in the meantime, although you kind of had to pay a price here in the market, the relief you got in bonds, kind of a good thing. So we'll see where that plays out, and we will see who ends up blinking first. But that is key number 2. As far as key number 3 in the rest of the week, you do have the government shutdown. Again, this whole debt ceiling and them passing a continued resolution or not, that could affect things. Surprisingly, the market actually does good under that. And then tomorrow you're going to get the JOLTS jobs openings. I don't think it's going to matter much because you had the non-farms last week. Usually the JOLTS comes out prior, but lately it has been coming out after. So I don't know if it's going to have that much importance. And then you just got to watch the momentum, whether or not we break the levels. If we drop, I think, another 20, 30 points below like 5,500, we go back. Again, that 200-day moving average, some of the past levels we were at even pre-election, we're going to fall back into that zone, and that's still a couple hundred points. So that leads into the momentum. There was talks of CTAs, kind of, the algorithms and certain strategies that were designed to either buy or sell. They're kind of done liquidating. We'll see how that plays out moving forward. That should be a good sign, but when it's all said and done, if people kind of play this back and forth panic, it's not really panic, and that's what we're going to talk about with the puts here, because it may feel like relief for a little bit like Friday, but unless we actually really move and change the momentum. For now, it's been 2 weeks of downside, so you got to watch out for that. We'll see what happens. Other than that, you are getting a big tech meeting at the White House, or a bunch of tech CEOs are going to be there, and then Trump will be signing executive orders, and we'll see where that takes us. But other than that, it should be an exciting day, up or down, and I'm sure all eyes are going to be on it because we are at the critical point. So I hope you're prepared. And now let us get into the plays. So right off the bat, baby, we got to start with staples. I did it again this morning. We did it on Friday. I'm going to add it. I'm going to repeat a lot on this watch list because I want it to be clear. I keep sending people back to this video, all these videos, and you guys have to make sure this is the answer. If you notice, and eventually this is going to fail one day, but if you notice the market's going down, a decent amount of staples, consumer staples, are staying up, that will be your play. If you watch the NASDAQ sell-off, we talked about this yesterday, this is something I would look at in the morning. I did it with Coca-Cola, MO, those all hit 50 to 200%. You had a lot of opportunity there, and if you remember in the past, I've told you guys, when the market goes down, you don't always need to short it. You don't always need to buy a put per se. When the market goes down, sometimes there's different instruments and assets that will go up. And that's what we've been doing lately. The last couple of days, the market has been dumping. Buy staples. Those have been melting up even in your long term. If you already had those in position value, you already see how you're doing well there. So that's what the staples are providing until they don't. It'll have a hiccup and lag one of these days, but generally we have noticed this theme, and until it ends, I would keep hitting that, and I would pay attention to that in the morning. If you notice the premiums are high, things are too expensive, you don't have to go chasing puts. If we gap down 2.5%, you could just go long on some of the staples there for a little, flip them, make it free, do what you need to do. But that is play number one. Watch out for that. We'll see what that provides tomorrow morning. And now, stop buying out of the money puts. So I showed you guys the chart, and this chart was the reason why you have to stop buying them. And it is showing you, and this is updated now, the S&P versus the SKU index. SKU index is like the VIX, but for out of the money options. And even though you are plummeting down 12% from the highs, people aren't buying far out of the money puts. They are not trying to buy crash protection. They are simply just liquidating. They are getting out. That's why I've been saying you have to be careful, because this is what happened in September of 2022. The market dumped a big amount and the SKU index went down. That's why you only made money by being in the money, getting that dollar for dollar. And I really want to make sure you guys are aware of this, because I don't want you to have good timing, know that you should be shorting the market, and you're like, wow, and you know everything. You take one of these plays, and then even though the market may drop over the next month, even if you get time, they may not go up, or you might not get paid as much. So it's going to change the strategy. I still think there's opportunity. So I'm not saying this. Here's actually the best part. I'm not saying this so you don't buy puts. I'm saying this so that you can buy the right ones, and you could make sure, kind of strike with intention, so that you know what you're getting there. Obviously the risk to rewards are going to be different, but if you really are seeing stuff and want to play it, just be mindful, because if we get these back and forth, just go look at the options so far. This is a massive dump. Look at 2 weeks ago, February 21st. Man, imagine if you got time and bought a put. You would think you would make a lot of money, right? Well, go look at them. I mean, just go through all of the chains. If you even bought a put here on this dip and then it bounced up to those highs, you're not even green yet, even after this. And these are on far out of the money plays. And what I want you to see, even from like February 21st, some of them, like after that one day, they went up and then it came down. You might be up 100% or so. You could make that on a value play in the morning if you really wanted to, but it's not like these are providing a big payout, even though the market dropped a lot. So again, some of them, they've added a lot of new options, but if you go to the one with history, some are a little bit better. Like these case, 1, 2 to 6, that's a little bit better. But even then, if you notice, it's not like these were the cheap puts at the time. And then for the most part, they didn't really even get past some of the previous lows up until the last couple of days. So you got to watch out for that. But I want you to hone in on plays. And now here's your other opportunity, single stocks. So the put to call ratio and then on SKU of single stocks, it's actually normal. So pretty much people are playing the indexes a lot more, and that's kind of affecting things. But if you go on individual names, I was talking about this today, there's some better opportunities. So if you can find the right names to go long or short on instead of playing SPY, you might be able to get a better deal on some of those. So we'll see how those play out moving forward. But what I really want you guys to be aware of is be more intentional. The chop, it will pay out near the money. Again, even on some of the flips on the short term, if you're especially trying to play one of the short-term dailies on news, try to get near the money. There will be time for out of the monies. And again, I like to play small and play cheap, but if we start to get some of these big downturns, like I'm saying here, be intentional or maybe go for individual names, because when it's all said and done, if we have a September payout, just watch the next pop. It's going to destroy all these premiums. And if you really want to grab puts, wait till we finally get a pop after just days and days of death and destruction. So we'll see where it all leads us. But at the end of the day, welcome to real volatility. Even right now, I think after hours, things are going nuts. So we'll see where that leads us. And now play number 3. We've talked a lot about staples and out of the money and some theory. I wanted to leave you with a name to watch, pizza. I brought this up at the beginning of the year as a dividend name, and some of these value dividend names have been in vogue lately. And just don't forget, they had a buyout rumor. I think the options kind of suck, but I'm going to keep an eye out because it's been holding up, been playing out like those value names. And it could kind of outperform like a staple, and it has the buyout rumor. This might be a good one, so don't forget that. And we've seen a decent amount of M&A plays and activity so far, so we will see where that leads us. But that is the final play. As far as everything else, I think we're going to have to see what is happening after hours. Again, futures are already dumping, so I think we're going to have a lot to deal with already. But other than that, I'm going to be playing there, be there live on stream. We'll get any updates. Let me check what's going on now, but at the end of the day, I think we're going to get a mix of both short-term plays and value. That has been good until we find out whether or not the market or Powell or anybody is going to blink. What is this? U.S. aims to build metals refining facilities on Pentagon bases as part of Trump's mineral orders. Mineral executive order would prioritize mineral processing, has no plans to establish a critical mineral stockpile. That's all I see for now. I see Zelensky saying something about talks being constructive tomorrow. Significant part of his Monday talks in Saudi Arabia dedicated to security guarantees. Something about Couche-Tard for regulatory approval in the U.S. and Canada. Yeah, no, they were just trying to buy. That's Couche-Tard trying to buy 7-Eleven. But, yeah, I think it's a mix here of Bitcoin, but they're up, and then, yeah, just some of the momentum still. So we'll find out by the morning. I hope you're ready for all of it. But, Chad, that is your watch list, ladies and gentlemen. Make sure hydrate healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. And I need you to remember the best way to stay sane is to have your moments of insanity. Oh, yeah, the world is insane. Don't go insane trying to find reason in an insane world. Oh, my. Chad, drink that water. Stay hydrated and healthy. I'll see you in the morning. And horn up.